Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we're starting with the Asian stocks. They closed sharply in the red. Of course, led by heavy afternoon sell-off in the Chinese market as brokerages tumbled after authorities launched probes for alleged violations of trading rules. In China, of course, equities saw a significant sell-off as a result of an investigation by the Chinese securities regulatory body into several brokerages for breaking regulations. We're looking at the Shanghai Composite Index. It closed 199 points or 5.48% lower. The Nikkei 225 index rallied in the afternoon trade, closing 60 points or 0.3%, slightly lower at moving further away from the elusive 20K mark. Of course, data that has been released on Friday showed Japanese core consumer price index fell for the third straight month. Of course, it was a fragile nature of the economy. The core consumer price index, which excludes fresh food, fell 0.1%. 1 year, of course, last month as a result of sliding commodity prices. Meanwhile, Japan's unemployment rate for October fell to 3.1% according to the government data, the lowest reading for October since 1995, as of course shortages of workers led to more people finding employment. But of course, despite having more people in the workforce, Japanese household spending fell 2.4% on year in October. Against the yen, however, the dollar was nearly flat at 122.60, remaining in the consolidation after reaching a 3-month high of 123.77 on November 18. And of course, up from its weakest low of 122.26. European equities opened lower on Friday as investors reacted sharp in falls of China's markets. Of course, the European Central Bank is also in the eyes of investors and traders of next policy meeting. The euro held above 1.06 and it was last at 1.0610. Of course, the prospect for more easing from the European Central Bank and its meeting next week with the policy and review has been keeping the euro under pressure. In contrast to the ECB, the Federal Reserve is widely, of course, expected to hike US interest rates in December. Also, we're looking at the gold prices. They dipped toward its lowest level in near 6 years on Friday, and it was on track for a 6th straight weekly decline, weakened by a robust dollar and expectations of US interest rate hike. That's likely to happen next month. Gold has fallen to 0.4% to 1067.60 an ounce in late Asian trade, edging close to 1064.95 reached last week. Of course, we're looking at the crude oil prices as well as the futures fell on Friday with losses this month standing at over 8%, hurting by disappointing Chinese economic data and of course worries of oversupply glut. West Texas Intermediate futures fell 52 cents or about 1.21% to 42.54 per barrel, as that is about 5.3% so far this week down, but of course it has also plunged 8.7% on the month. In the calendar today, UK's GDP preliminary report is coming out in about an hour time at 9:30 GMT time. Stay tuned. That's all for today. See you next week. Bye-bye.